Hello everyone, welcome back to my channel, and today we're gonna do a trade idea, a market review of the last trading day of 2003, right? That was Friday. Today is Saturday, um, December the 30th, and I'm recording this, you can see, at 1:03 p.m. New York time. That is. All right, so without any further ado, let's get into it. All right, so first thing you can see, I'm on the 15-minute chart, right? And I marked out the ICT Silver Bullet hours from the London in from 3 a.m. to 4, from 10 a.m. to 11 a.m., and from 2 p.m. to 3 p.m. I also marked out the previous day's high, Asian session high, Asian low high, and also I have the previous day um, low here, should be right there, and also sell side liquidity is sitting down here. Um, Also, there was a 15-minute fair value gap below here, also a liquidity void that price um, was gravitating towards, and then once it reaches, bounces off in the 2 p.m. to 3 p.m. silver bullet hours. We could see that we got an entry there. Got an entry before, but I'm gonna break this down a little bit more, and you see what I'm talking about. All right. So first thing first, as you can see, we wake up at 3 a.m. to trade the ICT Silver Bullet hour in the London session, right? So what I use the Asian session range, which is the Asian high, Asian low. I look for price sweep below or above. Once that happens, I drop down to the 2 or the 1 minute chart, right? So if we take a look right here, right? If we see price at 3, look down here, at 3 a.m., right? Price rallies, took out Asian highs, right? It didn't take out the previous day high. I would like to see that, but we can't always get what we want, right? So we just have to see what price is doing, and then we engage price. And it also took out these equal highs here as well. So these are our buy side liquidity, and it took out Asian highs. So that's two confluences, right? Once price does that, I drop down to the 2 or the 1 minute chart, right? Price is fractal, so you see the same thing on the 2 minute, you see the same thing on the 1 minute chart. So if I drop down to the 1 minute chart here, reset chart, and if I go over towards this price, reach above Asian session highs here. Once price does that, let's get this chart up here. So I'm going to go over to the 3 a.m. So here, right, you see price outside of the silver bullet hour. Price return back to a fair value gap outside here. Now, you can trade outside of those, but for me personally, I like to see when it happens in those hours. I that's just my preference. I like to see that. So even though this was created inside, right? I would like to take it while it's before 4 o'clock, and then you could hold it towards um, New York Open. But that's just my preference right there, right? So as you can see, price went back into this fair value gap here, and then it broke down. Also, we've got another entry. Let me remove this. If you had missed that entry, you could got another entry right here below that. So if I take this down here, that's another entry right there. That's a 1 minute fair value gap right there. So you could take that as well and look at the bodies. See how the bodies respecting that? That's what we want to see. We want to see that. Let me make this a little bit bigger just so you could see what's going on here. So you see right there, it's a fair value gap. This low, that high, created that fair value gap right there. So once price does that, make this a little bit darker. Once price does that, right, we could engage price if we know, okay, now the reason why this is important, right, I like to take the setup inside the silver bullet hour is because sometimes price will, you see how the previous high wasn't taken out, right? Price could take out the Asian highs, and then what it would do, bounce off of a fair value gap or an order block below here, and then take out the previous day highs. So you got to be cautious of that, right? So, but once you see prices breaking down, then you can be like, okay, if you're not comfortable enough, then you could wait until the 10 a.m. to 11 a.m. silver bullet hour. Then you put a short here, and usually you put it at the midpoint or before the midpoint. In my case, I like to risk at least 15, so, or put it above the last high before, before the high that breaks the that took out the liquidity from Asian highs, and then you will target the Asian lows. So right there, you get, if I'm risking the 15, then I'll get a 1-to-1. If I'm putting it up below, above that high here, I should say, then we're still getting like a 1.2 reward, right? So that's how you would trade the London silver bullet. Now, what I've seen through my back testing and from what I've seen is that this could also be a, what you call it, like a 2022 setup from the mentorship. So I would check that out as well. I will also recommend you check out the on the ICT, I should say. Oh boy, check out is how to implement the Asian range, and that's what I'm doing here. So I implement in the Asian range using the silver bullet hour or the 2022 model. So what you see I'm doing is I'm using time and I'm using price to see what's going on, right? To see the bigger picture. Because if I see that price already taken out, sell side, right, for the Asian highs, if I see that, what I'm going to do, right, I'm going to wait for a displacement, right, a market structure shift. Once that happens, I'm going to look for the extreme fair value gap, or I'm going to look for a fair value gap with an order block, fair value gap. You can take the first fair value gap and then put your stop above the highs. But know that if price is going to go to the extreme fair value gap, you're going to be in some drawdown for some time, right? So no one likes to be in drawdown, but it happens. Losing trade happens. So, just take that how you may. Now, once price is doing that, right, and price took out the Asian high and price keeps breaking down. Now, what we also look at the New York right? We look at New York Silver Bullet hour, and it's the same thing, right? Price respected that. I believe this is a 1 minute fair value gap here. The price respected, and then what happens? Second, right here. Price respected that, broke down, try to push back again, and then just break. And then went to take out previous day lows and previous and sell side liquidity down here. So now, one thing to note, right? Let me remove these as well, just so you can see the chart a bit better. Now, when you take a trade, right, inside the silver bullet hour, and you're targeting opposing liquidity, what you want to do is take off. If you have, say, for instance, 2 contracts, right? You could, if that's your daily limit of reaching, like a 1 to 2, 1 to 1, and is good with that, you always have to pay yourself, right? So what I do is I will take some off at the previous day low here, and then you could leave your stop or roll your stop or put it to break even or more just to pay commissions and so forth. And then you just let it ride because we have sell side down here, right? So we could target these sell sides. Now, another thing that I would like to review is that, go back on the 15-minute chart here. Now, when I saw that price was breaking the previous day low and it continued going down to the sell side liquidity here, usually I ask myself, how far could price go before it does like a retracement, right? And also you could trade the retracement. I normally liked when price take out the liquidity above or below a high or low, and then once that happens on the 15-minute chart, I will drop down to like the 3, 2, 1, and then I'll try to engage price while it goes down, and I'll target my Asian lows here in this case, right? But back to this instance here, as you can see, price went down, and there was a fair value gap below here, also a liquidity void. And usually, if you listen to ICT, he does mention that price, one of the strong magnets towards price is like a liquidity void because price wants to go fill that in, right? So what happens is that price came down here, and look at the bodies. See the bodies? They didn't paint outside there. So once that does that on the 15-minute chart, that's my bellwether, right? That tell me, okay, something is happening. But I don't engage price until I'm in like those silver bullet hours. So I'm, again, time and price, right? What is price doing? Price went down here, found support, and then bounced off of that, right? Now, that's what price has done. Price has taken out sell side liquidity all day, right? Now we come to the afternoon session. What am I seeing? Once I see this and I see price don't want to paint outside here, and I knew I've marked out where price could go to, right? And this was why we could do it wrong, because price could have still went down, right? And use this as like an inversion fair value or something like that. But in this case, what I've seen is that, and this is why you need to gather data, you need to back test, you need to forward test, and then go back in the charts like I'm doing right now, and just go through where price was and where price is going after, right? So when price comes down here and respect this liquidity void here, and then start to retrace, now what I do, now you could take an entry before the silver bullet hour, but like I mentioned, I like to trade inside the Silver Bullet. So it's like I'm implementing the Silver Bullet, and I'm implementing the 2022 model, right? Because you could take a setup before that, but I do work, so I work during the day, so I want to know what time can I come to the chart and look for a setup, right? And it's time based. So either I could take my lunch around a certain time, either I could step away for a certain time, or just make sure. And if I miss 1 hour, then I just look for a setup in another session, right? So once price does this and then start to retrace, what I do is that I drop down to what? 2, 3, or 1 minute time frame. Right? In this case, I'm going to drop down to the 1 again. And we're just going to look what price does. I'm going to remove these. Right? And then we're going to make this a little bit bigger here. Right. So let's see what's going on here. So once price breaks this high here, I'll say once price breaks this high from here and then breaks this high here, then you could consider that, and we're in a deep discount, you could consider that as a market structure shift, right? Once price does that, where is the fair value gap? The fair value gap is right here. Right there is the FVG. Could put this out here. And this is why sometimes you could take the setup before the Silver Bullet hour. Here. We're doing 15 and then 15. Go 1 to 1. Afterwards, you could bring your stop up. Lock in, put your stop above here, and then go for a 1 to 2. Also, if you're trading three contracts, what you could do is take off 2 at 1 to 1, and then leave a runner. Just let it run, right? And then keep managing that trade, putting your stops below, like the lows are below a fair value gap. If a price, for instance, if you move your stop loss below here, and price goes below this fair value gap, then you know, okay, the trend might be changing. Now we're probably reversing, right? Or we reach like an order block or a fair value gap, and then we trace back and then move forward. So you could trade that after. Let me put this back on. You could trade that before the Silver Bullet hour, but like I said, I like to do it during the Silver Bullet hour. And what do we have here? Right here. If I'm trading this, right, and I see this movement here, and I see that I have narrative, right? I have narrative, I have context. We hit a fair value gap, liquidity void. We bouncing off of that, right? Drop down to the 1 minute chart. What do I see inside of the Silver Bullet hour? This fair value gap here. Right. Get that there. So we see that fair value gap there. What you do, sell limit. As I said, I like to do 15. You could put it below the lows. I personally just like to do 15, like I have like a standard risk. So 1 to 1 right there. Let's see if we got a 1 to 2. Yep, I believe so. Hit it there. And now this is the important thing about trading inside of the Silver Bullet, right? You could take the entry inside the hour, but you don't have to kill the trade after 3 p.m., right? You could leave it running. The trade is taken inside the Silver Bullet hour. It could paint outside of that, and that's okay. We just need to take the trade inside of the Silver Bullet hour, okay? once price does that, then what we would do is get that there, and then we'll take our full profit there, right? So that's how I look at the Silver Bullet implementing the 2022 model as well. So you could take it before or after. As I said, I do have a full-time job, so my best time to trade the time-based model is the Silver Bullet. So this is just the review for the last trading day of 2023. So we go into 2024. Expect more trading reviews like this. If you like them, then I'll keep putting some more out. I'll do some more tips and tricks as well that I've learned inside of TradingView. And yeah, subscribe, comment, and let's get this. Let's do this. All right.